points on the lesson. Live in the hills, but I still get a spread. Started with a little, but I still reinvest it. Fear how I feel, then it feel like a blessing. I just want the lesson, I just want protection. I'm up and I'm down, but they sound like progression. Farmer never plans if he waits for perfection. Finger to the down.
All right, ladies and gentlemen, I got your Watchlist coming in on March 3rd, 2022, and oil is distorting the stock market. Today was a very wild day again. We closed at highs, but I think a lot of people are missing out on the impact of oil. It went crazy. We know why it's getting affected and everything going on, but you can't forget about how much of the market is made up of these assets. So we got a lot to talk about. I want to go over what happened in the market today, but beyond oil, we need to talk about Jerome Powell. He came in today and we're going to get him tomorrow, but what he said today, it was good and it is prepping us for the next 2 weeks. Again, you have the Fed on March 18th, but with all of that being said, you still had the Russia-Ukraine situation, and today there was not too many negative headlines, and we did start out with some good news, so you see the impact in how we ended up, but we got a lot to talk about. I'm going to go over everything that happened. Like I said, I have the plays for you. We'll even go over the ones that we're holding, and I have a couple of new ideas and plays that I made today, and then the plays for the rest of the week. So, drop your thumbs up on that video and make sure you're subscribed, and if you don't know, we are live Monday through Friday, 30 minutes before open, youtube.com/the stock market. We will see you there in the morning, baby. But as far as the good news and what happened today, it was all about the peace talks, and you heard about this in the morning, but I went through all of the updates here today, and it didn't really stick out, but a lot of people hung on to that in the morning, and then Powell, he started off, but the fact that Powell did not pivot, this is the most important thing. You know, one thing I told everybody today is just imagine where we're at. We are literally at the same point that we were at on that January 24th when everything was going crazy at the beginning of the year. So don't forget that, and remember, the big issue at that time was Powell. So that's why today was so important, because you got Powell, and you really just got to imagine how would the market have reacted if we weren't dealing with all of these sanctions, tensions, and all of that. So Powell was a very big deal today, and that contributed to the run-up, and it literally was just an exact reversal of yesterday. S&P and Dow, they killed it. NASDAQ lagged a little bit behind. That was the reverse yesterday, but you did get a strong close, and what I mean by that, we were able to close higher than we were last week on Thursday and Friday when we had the first invasion bounce, but at the end of the day, we are still at the mercy of escalation and Powell for the rest of the week. But coming into your first pretty picture, I really want you to see this, and this has to even do with how you're going to watch the markets play out, but what this is showing you is the European FTSE 100 overlaid with Brent crude, and what people are talking about is because you saw Euro stocks do good, and it's the same effect here, but 21% of the FTSE 100 is energy and material stocks. So if you don't know what I mean right now about oil distorting the market, that's pretty much what we need to talk about even here and moving forward, is that there is a lot of energy and other commodities that are in the stock market. Again, a lot of tickers, they represent all of these industries, and then what happens in these moments is that you're watching the market react to volatility. Again, the danger is prices going too high, affecting the CPI, again, even affecting the cost for business, for energy, and just basic costs that you need to function. But essentially now, during these little bounces, what you're watching happen is that oil and commodity and energy stocks are ripping, and on days where there's not that much bad news or less selling pressure, you got to understand that that is contributing to some of the green and positive that you're seeing. If things were really going to go crazy, and what you're going to witness is materials and energy stocks, they're pretty much going to go up on every single day, or have a trend for the most part where they do that, while the market will go up and down, up and down. But you see the days like today, even in other markets across the globe, when you're getting a giant commodity push, it tends to kind of distort what is really going on. It's kind of like the mega cap distortion when you start seeing the NASDAQ run up after earnings and all of that. So the real way we're going to find this out, we got to watch for more developments and see, you know, the days where energy is good and the market is or isn't, and vice versa. But now kind of tying it into everything else we saw, and to even understand the move that you got today, you really had Powell green-lighting the rate hike. Like I'm saying, if you didn't have the Russia stuff going on, the market would have reacted differently, because today's admission before Congress 2 weeks before the Fed, that is very important. He pretty much said we are going to raise a quarter point, and that's why you saw the market react positively today, because we have already been pricing in a lot more. We talked about it today. The only real risk from here is that if in the next 16 days before the Fed meeting, if Powell determines that the Russia-Ukraine situation was enough to actually not cut the rates at all, or raise the rates, then that would actually be negative. But now, seeing what happened today, you had the oil commodity push, and that was driving a lot of things up. It helped a lot of different stocks, and then Powell came in, said he's going to be moving the puck a little bit. Again, we were a lot more worried about this initially. He did talk about 50 basis point hikes, but it seems like that's completely off the table, and now the risk comes depending on the data, and that's where you're going to tie that into energy and oil. But that's what we got today. It gave us some insight, and now moving forward, we need to see the escalation headlines, and then we also need to see the Fed futures. And really, will higher prices across the board, especially energy, will it start influencing the Fed? I cannot stress this enough. But coming into the company news and events, I got a couple of ones, and then I'm going to go over a little bit of the updates or the timeline from today with all the Russia stuff. But one big one here, the MSCI, they announced that they are removing, quote, uninvestable Russia assets from the emerging market indexes. We even heard about RSX. They halted the ETF from adding more shares, providing liquidity. Literally now, RSX right now is a synthetic play. It's not really underpinned to any value at all. So situation's getting pretty wild. And one thing a lot of people kept talking about today is that a lot of companies, oil to banking, they are just shunning anything Russian related. They don't want to get in the middle of it. And quite frankly, it's hard to value because the market has still been halted. They still plan to halt it. And then everybody's kind of in limbo with, well, what's allowed and what's not. But that was a big piece of news. Another one related to it here, Visa, they disclosed their Russian exposure. They said 4% of total net revenue is coming from Russia. So not too bad, but definitely not good. But at the same time, MasterCard disclosed this a couple days ago, and they disclosed about the same percentage. So we will see what happens with that. And then another one, the United States announced that they are delaying ICBM missile test, and they're doing it because they want to avoid Russia confusion or escalation. They don't want to test the missile and make it look like it's not what it looks like. We just tested it. But yeah, there was that. And then the SEC, they are scrutinizing the NFT market over illegal crypto token offerings. This isn't all the NFTs, but essentially they're going after NFTs that are backing a real asset or represent like fractional ownership. Essentially, people are taking items and then splitting it into 50 NFTs. So if you own a majority or like 40 of the NFTs, you have access to the item. It's kind of weird there, but they're going after it. It's kind of the first thing we've seen so far. So we will see how it plays out. But as far as the timeline for all of the Russian events, you can see here in the morning, it started with Russia claiming that their forces have captured Kherson area in Ukraine. And then a couple hours later, Germany throws support behind military spending splurge. Then 750,000 people have fled to the EU. And Sberbank, I don't know how to say it, they exit Europe after sanction. Then Russia takes area around the biggest nuclear plant. Then the EU agrees to sanctions. I'm going real fast because there's a lot. Then Airbus and Boeing suspend sales and support to Russia. Then a vast majority of Ukrainians believe they could repel Russia. That was a poll that they did in the middle of all of this. Then UK's Johnson agrees with Zelensky on the need for more sanctions. Then the EU estimates that sanctions have hit 80% of the Russian banking system. And this is now 12:45 p.m. This is on Central Eastern Time or CET. But there was that. Then Nigeria is going to be evacuating citizens from Ukraine's neighbors. That was 1:20, 1:30. Then Russian officials, they see a direct conflict with NATO. That was 1:30. Budget airlines offer aid to Ukraine. Russia default angst lingers. There was a junk downgrading, I think, by Moody's, like 7 downgradings below. Then the Russian central banker says that they didn't want this to happen. That was Elvira Nabiullina, but they did not expect this was all going to go down like this. But there was that. Then oil and natural gas prices started soaring. You had oil and gas open up very, very high. And again, this is part of it. This is where I'm saying the market's getting distorted, because just imagine what is happening to all the energy companies. So you started having all of that happening. Then the EU started blocking Russian ships. This makes a lot of the commodity futures stuffs even worse. Then Baltic leaders call on a public not to demonize local Russians. Again, a lot of back and forth with the oligarchs. Then Biden says that the U.S. is open to banning Russian oil and gas. They announced a task force to target oligarchs and all of their assets. So kind of went back and forth there. Then Moldova requested international help to manage refugees. Then a Russian oligarch, Friedman, called for Russia to end the war. Then U.S. Congress weighs imposing tariffs on Russian imports. Again, another step beyond just sanctioning. Then the UN slams the invasion, showing Russia's increased isolation. Russia announces first casualty count. About 498 Russian soldiers have died and 1,500 have been wounded. Then Ukrainian delegation said it's on its ways for talks with Russia. And this is where I botched it, actually, because here, 6:38, this is pretty much 9:30, 6 minutes after the bell. And this was the good news, that the Ukrainian delegation was on its way to talks with Russia. So pretty much all of that was happening at night leading into the open. And now this is the stock market open. Then U.S. sees Russian forces stalled near Kyiv. They said that the tanks have slowed down. They need more fuel and energy. Then the EIB offers Ukraine 2 billion euros in aid. Then U.S. seeks to undercut Russia primacy in oil. Then banks of Russia keep stock trading closed on Thursday. U.S. senators propose the ban on importing Russian oil. Blinken to travel to Eastern Europe. Then postponing the missile test. And then 17,000 Ukrainians and Russians are stranded in the Dominican. And then the commodities market surges as traders avoid Russia. So then it led us to everything that we had here. So you can see how it plays out. Hopefully this gave you some insight. Maybe we'll go over this tomorrow or kind of like middle of the week if this keeps persisting. But you could see a lot of information, a lot of stuff affecting futures. Then you get into the market open and then everything goes crazy. But very straightforward, a lot to digest, and we're going to get a lot. We're waiting for this week to show us how it's all going to play out. But it looks like we're going to have an exciting few weeks. So get ready for volatility. But that is pretty much it. So let us get into the plays. So right off the bat, I got 3 or 4 stocks that I'm looking at coming in tomorrow, but I am still holding the wheat play. I really like it. We're even going to talk about it. I even paper traded some futures as well. And we were talking about this yesterday. I was saying, hey, you know, if we wanted to get real exposure and if the option premiums are crazy, why I would consider futures, because I like the wheat play and we already got in early. Premiums were up. So I said, all right, let me just see what would happen. I did one short on the mini futures. Then I grabbed 5 of the bigger ones with an amount I thought I would, but I made like 16 grand on it. It's fake money. It's fake money. Don't worry. But this is what I'm saying. At the very least, I know we've been talking about it. Some people might get excited, but what I'll tell you to do, definitely paper trade these and get an idea. But in the meantime, I'm going to be focusing on those wheat plays and even our Alcoa's, Energy, and all the other ones, even the Brent. But I am also looking at other plays. And now that first play, UNG. And I think this one is interesting. A lot of people called this one out today. And like I'm saying, I have no plays, but if you go look at the chart, it is lagging behind a lot of the energy or material plays. A lot of things are popping off. All these different companies, you would think United States natural gas would do a lot, but that's the problem. It's United States. The Europe natural gas situation is a lot different. So that's where I'm kind of looking at this. Pretty much, if this situation keeps boiling up and gets worse and worse and worse, then I think UNG will react. Otherwise, it is very domestic related, and then that's what I'm worried about. But essentially, if this does spread and this does get a lot worse, UNG is going to be on fire, and I am definitely going to be keeping my eye out for this one. But watch them. That is the first play. Then the second play, these are the 2 plays that I made today, PLL and Snap. PLL is a lithium play, and the fun fact that I got from it, their only customer, when I went to the supply chain analysis, said it was Tesla. So they got some connection with there, but I'll tell you the reasoning why I got this. But then also Snap, same reason why I bought it. And now the reason is I saw these come up on an option scanner, and really they stuck out to me because they were big trades, both in dollar amount and even the nominal amount that they represented. But all of these contracts were relatively new or never purchased, in the sense that they weren't necessarily new contracts, but these were plays that were very, very dry. And what inspired me, well, if you remember the wheat play from a couple days ago, before we got into that option chain was really, really dry, and you got to see what some of the moves did. I think we bought it when there was 0 on the open interest for wheat. So started looking around, these two plays stuck out. So I said, hey, let me see what's going to happen. And I decided to go with that. And because I also thought that they blended in. Again, one is a lithium play related to commodities and all of that. The other one was Snapchat. And even after a good day like today, Snap was on the downside. So I said, all right, I think I could justify this, added to all the other stuff that we're holding. So as far as the first play, I grabbed the PLL October $65 call. I grabbed one of them at about $750, so a little bit more expensive. It went up, and literally right from open, this thing just shot up 6%, and then it stayed there, but you can pretty much see it here. This is a fairly liquid stock, but like I'm saying, it's kind of been in the gutter. It's related to the commodities and even some of the EV stuff, so I said, hey, maybe it could be a little bit decent. So thought that was a decent one. Then the next play that I grabbed, it was a Snapchat April 8th contract, and I grabbed, I think, 10 of them, and the stock was already down. It was the $28 contract. I got 10 of them at 64. I guess they were going all over the place, but they were dropping throughout the day. They went up for a little bit, then came down again, but Snap was down pretty hard early in the day, so bought it at the wrong time, more or less. That's where the premium, but I still think it held pretty well. The other play they did was the 27. That's the one that caught my attention, and again, this contract was created a couple days ago. The only real big activity that came in was today, so that's the thing that caught my eye. But this one, a little bit interesting. Thought I'd do it, and then we could document it and see what happens. But those are the two other plays in the second one, and then finally, MO, baby. So I sold out of a play. If you remember, we got this about a week or two ago, and we made sure we got time on it. I bought them at 5 cents, sold out the first set at like 7 or 9 cents, got my money back, and then I held another 15, sold out the rest today at 13 cents. So decent profit, but I am going to look to double dip. Essentially, MO is now at a multi-year high breakout level. If it keeps going crazy from here, people still like the defensives and value. They may be able to benefit from it, and we've done this many times on Altria. I'm just going to wait till the stock moves up, and then sometimes those weeklies get clapped, and then when the momentum comes back, you should be able to get something cheap, but we can't force it. But I am definitely going to be watching that for the rest of the week. But those are the main plays. As far as everything else, those are the only other trades that I made, and like I said, I am still going to be watching the wheat play. I think we're up like 160 at one point. They went up to like 250%. Still holding the Octobers, and like I said, if anything, I'm waiting to grab the shorter term contracts on wheat. I did go through all of their holdings, and this was the discussion that we had yesterday. Like we said, wheat had the biggest spread in 30 years, and what the futures were indicating is that pretty much the supply situation should return to normal by July 2023. That is next year, and that is the backwardation on the contracts, because essentially the premium on shorter dated contracts are higher than longer dated contracts. So I looked up the holdings of wheat. They only have till the end of this year on any of the contracts that they're holding. So this gives us the right exposure that we need. The only difference is the premiums are up. So like I said, I'm going to wait to see if it comes down and just get ready. Like we're saying, a lot of things are going to get distorted. You've seen this pattern where kind of goes up, shoots up. It's going to have a lot of volatility, and then we're going to see what happens. But I'm telling you, this is going to be at least another 2-week process till we really start seeing what's happening. And that's why I'm going to be eyeing wheat, WEAT, the stock right here. And then if anything, I will be looking with the future. So if you want to be prepared for anything of that nature, just open up that TD paper trading account and get familiar. There's /ZW and /XW. These are the two wheat future contracts. One is just bigger leverage than not. So we'll see what happens. But those are the other plays. Going to be watching them. Going to be watching XOM. I sold out of that final weekly. Got like $1.20. It was like 250%. JP Morgan, they went up, and banks were a big leader here in the morning. So watch out for them. Like I said, if we are going to get any sort of bounce or even level up to here, I think financials, they could recover a lot. And just don't forget the dominance that they were displaying at the beginning of the year. But watch out for them. Snap and PLL, like we said. B&O, it's going absolutely crazy. And this is what people were talking about this morning. If you even go and compare Brent from last time it was at this high, 2008, 110 is big. If we do not fall below 110 and this level doesn't become support, the next level is already going to be 118, 120, and surprisingly, we're pretty much already there. So we're going to see what happens, but I'm riding out those Brent plays because they are almost in the money now. So if we're expecting a couple more weeks, remember, this has really only been about 7 to 10 days since all of this happened. You saw the invasion and all of that, but now for any sanctions and the global stoppages stuff, and then once ships return and do all that, the real second or first wave of it hasn't really begun. So still down to hold them. Again, we made sure we got time on everything so we could be a little bit patient, but definitely going to be watching all these tomorrow. Then MO, like we said, NTR. This is one of the fertilizer plays, and even during the Powell thing, a couple of the congressmen brought this up, so going to be watching them. They went up today, but the premiums all through the roof. So like I said, we're going to have to wait for our opportunities to double dip. Alcoa, they kept going, but the premiums did not go as high. It might do one of those moves. Again, you've watched Alcoa. This is kind of how I think wheat is going to move, where you get these run-ups, it could stall out a little bit. You notice how big the candles are, sells off for a little bit, pops up, and again, we've played Alcoa twice or 3 times already this year, so you just got to play the waves with it, and this is kind of how I think the wheat chart is going to look more or less, especially if this situation is truly going to become the squeeze that it may look like it be. So watch out for that one, but watching Alcoa, still got those plays. UNG, like we said, you can see compared to a lot of the other ones, it's kind of stayed pinned here, so we're going to have to see, but this one is very insulated from what's going on across the world, so watch out for that. Then I'm going to be watching Ford, the EV spinoff news today. I didn't think it would have this big of a deal with it. Again, we've been talking about that news for a while, but people liked it. I'd watch for the continuation or breakdown. It's really hard to say right there, but keep your eye out for them. Snow, bad earnings miss. Watch for the post earnings. You could have played the cheap options, but you missed some. It's okay. Don't worry. Pre-earnings or post-earnings tomorrow. Keep your eye out for them. Nordstrom's, they beat and they killed it, but options were a little bit hard there in the morning, but watch out for them. And then Square, again, with the banks going up and some of the other ones, I was like, well, they had good earnings. Just keep your eye out for them. We have some of those other plays, the small ones we did post-earnings, but still keep your eye out for them. And then TLT, surprisingly, saw big resistance and came down. And if you haven't noticed anything, it looks a lot like your December rate hike odds. And again, this was the big deal. Powell did leave room for 50 basis points today, but just not here in March. But the amount of 5 or 6 hikes, or 6 or 7, like Powell said, that is still on the table, and this is still diverging notably. That's why I said no matter what happens from here, we still are going to have to really digest, okay, how would the market still have to handle everything with Powell and with other consequences besides now pressure from oil, commodities, and more pressure from prices. So that's the key right there. That's what I'm going to be watching for till then. TLT is probably going to dance around in a range, but you really only got 2 more weeks of time, and then we're really going to see what happens, especially after the Fed gives information, and we'll probably start guiding for the next move, and then we start wrapping up Q1. So I hope you're ready, but that is your watch list, ladies and gentlemen. Make sure hydrate, healthy, ready to go. Make sure post your watch list. Make sure we see you there in the morning. I need the armor on. I need the helmet shining. I need you. Remember, baby, don't build a castle out of mud, but the code loves you. I love you, and we'll see you in the morning. Let's go.